media, unfortunately. Welcome to the
Right.
Futures Edge show. I am Jim Iuorio. That's Bob Iaccino. That is Chief Technical Wizard of Path Trading Partners, Mike Arnold. Before we get going, a couple things. First of all, our sponsor, Independence Arc Farms. We always complain about how big conglomerates have taken over the food supply. There is something you can do about. Patronize small, independent, grass-fed, grass-finished beef. It is amazing. It'll make you feel better. We were just talking about people we know who've gone on carnivore diets. I won't say who unless Bobby wants to, but someone who needed a hip replacement, 2 weeks on the carnivore diet, no hip pain at all. Anyway,
Well, I want to clarify. I
Sure.
really kind of wanted to mention this. It was
Please.
a lion diet, so there was no bacon, no coffee. She cut out everything except ruminant animals. For those of you that don't know what that is, that's cattle, bison, lamb. There's probably a couple of others, venison, and salt and water. And 2 weeks later, she could move her knee back to her chest, put her leg out to the side, equivalent to the hip that she didn't need replaced. And again, I'm not crazy. I'm not saying she's cured, but the pain is gone. It's just unbelievable.
Well, and then I chimed in with you guys. Who you guys are watching us know about 2 years ago, I went on kind of carnivore light with cold therapy, with intermittent fasting. And Jesus, I can't keep weight on. I feel unbelievable. I'm doing a triathlon with my daughter 2 weeks from Sunday. I plan on getting the best time I've gotten in 20 years. I'm planning on a 250 Olympic triathlon, so I will keep you guys posted. If I fail miserably, you'll know because I'll just shut up about it. I won't say a word.
Like, how miserable could you fail? The fact
Right.
that you're, nearing 60 and you're getting close to one of your other times.
Exactly. Right. So I'm just, this stuff has been amazing, but that's not what this show is about. This show, we have had some volatile markets. I don't know if you guys noticed. Friday, there was some headlines that seemed rather interesting. Bobby, are we live yet? Did you retweet it out?
We are live.
We are live. I want to retweet it once before I ask the first question. There it is.
Tweet it out there.
Join us, please. And guys, by the way, we love questions. We love comments during the show. That's where we feel the most at home when we're answering questions on the fly. Okay, let's talk about that disaster on Friday and the subsequent trade from that. Mike, what do you got? S&Ps we're going to, by the way, I was actually in some ways, because I know it takes people a couple minutes to join us, I was going to waste about 2 or 3 minutes at the beginning just to make sure you guys are all in your seats, because I think this is important shit. We're going to go over all the different time frames of the S&P and talk about portfolio construction along with trading. But let's start. This is the Daily Bar. Let's roll, Michael.
Why was it a disaster on Friday? I mean, we finally, it was, I mean, you could say the revisions to the payroll numbers or non-farm payrolls were somewhat of a disaster, but I mean, not from a market standpoint. I mean,
but we're in the media. We have to have clickbait. The market's in turmoil, shit like that. Start speaking more hyperbolic, Arnold.
Market's in turmoil. All right. Last week was down, what, 2.5%? Oh my, after this? Come on.
Okay.
This is, all right, let's just look at the weekly. First, I'm going to the monthly. You know what? This is the disaster. Even look, let's put this in perspective of the last few. You can't even see this little red blip, and we're not. Yeah, did it pull back more? Yeah, but just let's take the month from the last breakout, which was in June. This is your disaster so far. Even if it pulled back to 6,000, it wouldn't be a technical disaster. So this is, the media drives me crazy. It's why I'm bald. It's insane. Oh, we're crashing. We're down. No, okay. We were overdue for a pullback. We've talked about it in the newsletter. We had weekly cycles pinned to the top. We were extremely overbought. We finally, let me try to clean this up just a little. Here's the rotation zone. We finally returned to the weekly rotation zone, the top of the weekly rotation zone. We're getting a little bounce here. Now, probability-wise, put this in the newsletter too, the probabilities state that we should see a multi-leg correction like an ABC correction. Where going into this Monday, I was actually watching for a bounce early this week. We got it Monday. We should still technically see another leg down. Not a guarantee. That's what the probabilities favor. Unless you can play along at home with this week. If we close on a daily basis above 63.82, this could turn into more of a sideways correction in the bigger picture, because that would shift the probabilities in the short term where we could retest 64.11 and 64.40, which means we're stuck into more of a range bound correction. Remember, there's a pullback correction, more so what we had back in April, which was an overextended pullback correction. And so far, this is just, yeah, we pulled back to the weekly rotation zone, but we really haven't done much technical damage. We're 1 week down, and we're already bouncing against the weekly rotation zone. So in the short term, if I close above 63.82, I'm going to, this doesn't mean we go to new highs in the short term. It means I'm going to watch for a retest of the upper area, again, 64.11 area, then especially 64.40. There's a couple, we had a gap reversal above there on the daily chart, and we spiked above there, setting in the high topping bar back last Thursday before the sell off on Friday. So I'm watching for that. If we do not get a close above that, I will continue to focus on continued another leg down. In the real short term, in the micro term over the next couple of days, I'm watching this upward sloping channel. Just gives people another thing I'm keeping an eye on. And the real short term, if we use the harmonics here, I'm looking at roughly around 62.90 area. We start closing below there, I'm really focused on the next rollover leg down.
So it
that's
sounds
your little bit on the S.
But it sounds to me what you're saying is short term, you favor mildly a corrective phase that probably takes us lower. If we settle above 63.82, I believe is the level, then you believe the corrective phase will be sideways. Either way, you don't think we're ready to blast to new highs yet after Friday's move, correct?
Blast to new highs. Well, we could. We still have passive flows. It's not in the probabilities. The probabilities still favor a longer. You can see the weekly cycles. They ripped the whole cycle up here. So we could go into a consolidation. Yeah, we could grind higher. We could do something like this back. See what if you look at the price action from December 24th through even February before the tariff tantrum sell-off, you see how we sort of ground higher. We eked out a couple minor new highs, but we really didn't do much.
Yep.
We could do another one of those.
Okay.
The odds that we blast off from here are like the odds that we just do like what happened last April where we pulled back and then we just skyrocketed to new highs. That's not the highest. That's not even it's maybe about a 10% probability. Could it happen? Sure. Anything. I'm not discounting anything in these markets. I mean, we got Palantir report yesterday and already trading 300 times forward, next forward earnings. You know what? People are just buying everything, and the passive flow is immense still.
Right.
So
I have a question.
Happen, yeah, but I got probabilities.
So a question for both of you. Monday, Tuesday, Wednesday, Thursday of last week, independent of the unemployment report. Each day we started out higher and bled away and finished the day lower. And then on Thursday, we got Amazon earnings, which look great, and they beat the crap out of the stock. Should those have all been tells for Friday, in your opinion, first, Bobby?
No, I don't think so. I've seen price action like that before around big events.
Oh, okay.
Like non-farm payroll.
Just nervousness.
Yeah, it's just, to me, it was just nervousness. Some people might say it's a tell, but I think it's probably not a very good trading strategy, so to speak.
Right. Another quick question. When I was eating my eggs before I came on, and I took a big chunk out of the side of my tongue. Does it sound like I can still talk right now? Because I think
that's a bearish signal.
That's a bearish signal, right?
I want to point something out because Mike, you were talking about what the financial media does, and one of the things that the three of us, but Jim as well, but the three of us rail on, is that you guys, as active traders, as medium-term investors, whatever you want to call yourself, I have Bloomberg on with the sound off. I wish I had another option because all I'm looking for is every once in a while a piece of breaking news. And late yesterday, I saw a piece of breaking news. Seems like the yen carry trade is being unwound again. Can you put up a monthly yen chart, Mike?
Sure. And then can we jump back? I want to give a couple more things on the S&P real quick, but I'll jump to monthly yen. Here's your monthly yen chart.
again, that one bar right there would be the yen carry trade being unwound as far as the media was concerned. And there it is. You can't even see it.
Here you go.
Yeah, that one candle right there, yen carry trade being unwound.
Yeah.
People have to remember that if you've ever spoken to a producer at a financial news desk, they generally don't know anything, and they'll be the first ones to admit it. They don't know anything about the markets, but they're charged with writing headlines for the talking heads who oftentimes, not always, but oftentimes don't know anything about the market either. They don't even necessarily know what questions to ask. One of my favorite things that I hear on Bloomberg a lot is after some news comes out, one of the talking heads, one of the anchors will be like, and now the question becomes, and I'm always like, thank fucking God you just told me what the question was. I know what the question is.
We want to know the answer.
Anyway, go ahead, Mike. Back to your S&P.
I just want, if we do start the next leg down, I just want to give people a very key area to look for. So on this last run up from the launching bar back on the 23rd of June, the 50% harmonic is around 62.13. The 62.5 is 61.49. Between that area, I will watch for another. If we do start breaking down below last Friday's lows, that's the key area. I'll start looking for another pullback, because then we'd have the A pullback, the B bounce, and then the C correction. Right between that is the 50-day exponential moving average, which we haven't crossed below since we broke above it. I mean, we haven't crossed below it on a closing basis since we broke above it at the beginning of May. So that's the next area I will watch for a major buy pattern if we unfold the ABC correction.
Makes sense. By the way, you were going to explain, we talked about this in the green room before we began the show, and you mentioned maybe Palantir, and you said something about a % B buy. I know you mentioned that in the newsletter quite a bit. By the way, guys who are watching this, I know all of you know I'm going to say it again. It's the Unfiltered Investor newsletter, which is basically the three of us, mostly leaning on Mike's technicals. Just kidding, but where Bobby and I provide too. But the reality of it is that we are trying to create a forum that is real live trading and financial news, away from the pressures of these producers and overzealous sponsors. And it, because Bobby and I have been in that environment, and it is ridiculous. Please check out the Unfiltered Investor newsletter.
All right, % B buy. I'll give out the rules here. I mean, on something that's trending, I watch for pullbacks, and it's a % B indicator. Most trading platforms have it. It's right here. I set it to a histogram, and it's a 5-period length. The source, input source, is high, low, close divided by 3. If for some reason you can't do that, you can always just choose the close. It's the high, low, close divided by 3 works out a little better, but they're close. One standard deviation. Again, I set it to a histogram, so we get the bars here. And what I'm watching for is a bar below the 0 line for buy setups, and then that sets that high as a key level. So we break above that high and follow through with a close. A close above that's a technical trigger point. I will do these intraday. Okay, intraday, if I get bullish signals even before the high, I'll set targets of the high. We break through the high, I'll just keep following it through, holding it into the close. So you see here, you can see on Palantir, again, not suggest you trade Palantir. Palantir, yes, they beat earnings. Yes, the P to E after the beat of earnings only dropped to 529. Forward PE is trading at 300. So this is a very overbought, risky stuff, but people keep pouring into it. Here was a % B buy back on the 22nd. You see this was a setup with a below 0. And then the next day followed through with a close above the high, moving up. Right before earnings, you had one broke above the high with the setup bar below 0, and then we launched into earnings. So again, these can be traded on a bunch of things. Here was the last one. Where was a good? I love these on weekly stocks too. If you find weekly ones for stocks, they are fantastic. It's something you might want to add to your repertoire. So if you hear me reference either on my live stream or in the newsletter a % B buy, those are the entry rules. The stock technically goes below the lowest low of either the entry bar, the setup bar, or if there's a lower low the day before the setup bar below that key low. That's the worst case stop you want to use.
I got about 70% of that, Bobby. You get it, right? By
I
the way,
do.
people, with Mike Arnold, sometimes you listen to what he says, and it can be a little bit confusing because there's a lot that goes into it. That's why you just stay with it. And I'm speaking from experience. After a couple months, you're like, oh, I get exactly what he's saying. He's not like other technical analysts would say, buy it here and it's going here. He's saying these are the probabilities. Make your plans accordingly.
Yeah, that's the best thing about these.
I'll give here's NVIDIA, by the way. Here was an example of a weekly percent buy that triggered on the break. This is from the beginning of August. Last week it triggered it and ran up, potentially setting up a double top pattern in NVIDIA, which, interesting enough, I have a reason to stop now on any NVIDIA longs, but the initial stop was below that bar, and that's the base now for this has entered potential double top territory. So, by the way, on an NVIDIA, I know we don't regularly cover that. If we close below 170.89, just a bonus tip, that triggers a massive double top pattern on NVIDIA, which could also then lead to a more substantial pullback on the S&P and NASDAQ. Other than that, if that doesn't trade, trend is still up, and AI, the raw AI trade is still going. Sort of sidetrack there, but I thought that was important to give an example of a weekly one.
Michael, can you hold on a second? Haley's asking you about your connection.
I can switch to I have two connections. I can switch to a backup one. I don't know if it'll disconnect me.
I wasn't sure if it was me because I'm in Florida with another storm, so I didn't know if it was me, and that's why I didn't say anything.
Here, I've switched to another. I run multiple internet connections, so I switched to another one.
This is better. Good.
All right. There we go.
So I know it's similar, but let's go to the NASDAQ because I think most people we're going to be talking to on this show are going to be trading S&P and NASDAQ, Qs, SPYs, ES, NQ, whatever it is they're trading.
Well, is that the weekly
NASDAQ,
chart?
This is the daily chart of the NASDAQ.
Okay, but that engulfing candle and then on Thursday and weakness on Friday, does that make it a little more ominous to you or no?
No, we didn't even break key support. I mean, it sold off a little more, but it was more overextended. Here's the weekly. You see, we've also returned. I mean, put this in perspective. Here was the last key major breakout level, which we broke out back in. Here's the level I'm looking at right here, around 22. Let's just call it 22,300. We broke above that in May, right around Memorial Day. This pullback hasn't even taken us back to that.
Good.
So,
yeah, good point. Yeah.
I mean, again, we always got to keep putting things in perspective. On the daily, yeah. Was this a 2-day sell-off pattern? We've already pretty much reclaimed Friday, yesterday. I mean, we nearly wiped out all of yesterday. Yes, there was still a gap behind from Thursday to Friday, which we filled today. The key level, same analysis as the S&P. The key level, 23,444. Just remember 23,444 on a daily closing basis puts me more in consolidation mode. We don't close above that. I'm still watching for another leg down. Again, very similar chart between the 50 and the 62% harmonic, 50 coming in about 22,706, the 62.5 coming in at 22,421. If we get the other leg down, that's my major focus area for a buy setup, right in the around 22,525. If we take a look at that on the weekly, that also takes us a little deeper into the weekly rotation zone. So does that do major technical damage? No, we could even a pullback to 22,200 doesn't do major technical damage yet. So that's where we sit at that going into the next couple days. If we continue the pullback, The short-term level that I'm focused on, sort of to tip it back into more bearish mode, is a close below 23,011. So just remember 23,000. We close back below that, then I'm shifted to more focusing a retest of Friday's lows and a possible break of that to start the next leg down.
Makes sense. Bobby?
I want to jump real quick to something I don't think you're going to have an opinion on, but I want you to kind of look at it anyway, and that's the copper futures chart. And let me give some background why I'm asking about this.
Because I got my ass handed to me in copper?
No, there's been no bounce at all.
Yep.
And I was talking to a trader today who said, I expected a little bit of, just like sort of a bottom feeder buying. And I said, honestly, I didn't. And that's because to me, it was a complete shift away from the narrative that took copper up to where it was, that narrative being the tariffs, and then the prior narrative being electrification, which we agree, Jimmy, is still going on at a very high level.
For sure. Yeah.
Not necessarily with government help on the automobile side of things.
Not in this country, but yes, I agree.
Right, not in this country. So, Mike, what do you think about the levels it's at right now? And I know you're not going to say it's a great buy here, but I just kind of want to get your overall view of copper, where it sits.
Just based off probabilities and the harmonics. By the way, on a side note, I still want to know how they get these mark-to-market closes on copper.
We talk about that before, and I don't know, right?
The one on Wednesday, I just want to point something out. This is sorry to go off on a mini rant here. Well,
all right.
The chart to go. I mean, if you look at the I guess we're not going to get it here. Why is everything so slow? All right. If we look at where it actually settled, like pre-settlement, where it ran down on Wednesday, at the end of the day, it was trading right around like 462, and then the mark to market was 558. Okay, I'm sorry. Slight
that's
difference.
Funny. Like, Jim, you remember the interest rate days when we used to spend on the trading floor 45 minutes to an hour and a half trying to understand where they got the option settlement they got?
Yeah. Oh, I'd be in the middle of it arguing with them because sometimes it was a little bit nefarious as well. Yeah.
I'm not saying, I'm just like this one, because we've talked about copper having some weird ones before, but this one I'm like, what?
Huh.
Just from pure harmonics and the probability wise, the buy zone for me is for looking for potential buy setups is between $4.03 to $4.27. And if you look back based off the most recent harmonics, and then if you ignore that completely and you just look at price action, where again, before the last few breakouts, you see where it consolidated down here right near those areas. So just based off probabilities and where prior price action was, that's where I will be looking. We don't have any strong setups. We gapped up open to the 200, became resistance again. This needs to form at least some kind of stronger weekly turn pattern. And you see the 200 week, look where it is right in the middle of there. Yeah. So that's where I'm going to be focusing to see how we react there. Also, prior key resistance, we broke below it, tested it there, failed, retested it here, and then launched off, dipped below it, and then closed above it. So it's right at that 87.5 harmonic, right around 427, 428. That's the first area I'll be watching, and then I'll be paid. That does not mean I'm buying that level. That's where I have alerts set to say, hey, copper's entered, where I will start looking for some decent buy patterns, but nothing yet.
All right, real quick, I just want to say hi to Anissa, who we all know. She watches.
Love Anissa, yes.
So Anissa's here. She said good evening. She's I forget where she is. Mike, do you know off the top of your head where she is?
I think it is.
I think she's in Romania. Anyway, Tim found the chat. So, and Tim is asking for some analysis on oil. Now, Jimmy, I don't remember which show it was, but I talked about oil being very similar to what Mike and I call a shake and bake pattern a few days back. Now, I don't think it quite fit the entire definition of a shake and bake, because we didn't have a very well-defined horizontal channel, but we had a horizontal channel that or crude oil, I'm sorry, has been in since about July. And this is why I like the pullbacks, Jimmy, because we had sort of a breakout. It looks like, yeah, right there. And then we had a little bit of a follow through, and then we had to collapse back into the channel. The top of the channel didn't hold. So go ahead, Mike. It's all yours. I don't remember what show I talked about this.
I remember for sure.
I don't remember it. But I talked about crude possibly going back into the channel. And if it did, it had a high probability of going toward the bottom of the channel. And that seems to be what happened. But this is Mike's pattern. So I want Mike to talk about it.
Yeah, this could be a shake and bake, although it's coming back into a very well-defined pattern here. We did break out. What a shake and bake is when it breaks out of a horizontal channel one side, sucks people into the long side, immediately reverses and forces liquidation. Now, the liquidation is slowing down. I put it out in our newsletter that I'm watching still for buy setups between about $64.75 to $64. I will still look for potential short-term buy setups. If we close below 63.96, that tips the harmonics to continued probability pullbacks lower. It also means we lost the last little support base here, potentially. And I'll start focusing then on rollover plays into this lower well-defined channel that we had from April and May before we broke out at the beginning of June, retested that breakout level, and it's so far defined. So not only just from pure support resistance with prior price action, but also from the harmonic standpoint, 63.96 is key. If I don't get any buy setup down here, 64.75 to 63.96, then it's hands off for me, and I'll start looking for sell setups with the first target being 61. We break below that. You can also see that's the harmonic level, and right around that, this was prior support base right before we broke out. So that's going to be a key first target. We break below that. You have the next target being the 87F harmonic, and look how nicely it lines up with a prior key reversal bar, little shelf there that broke below, setting up a %B buy bar right here, and then running back up. So just tying in a couple things there.
Quick question though. So the fact that it's had 4 straight red candles kind of cascading lower, obviously some longs were trapped and trying to head for the exits, and it's gone right to what seems like very, very good support in that channel. And I know you are not making a trade until other parameters are met. But gun to your head and someone said you had to take a position, you'd rather be long with a stop below it than short. Is that correct? Or am I putting
correct? At this point, I'd err on the side of being long, and that's for a bounce play only.
Yeah, right. Oh, I know what you mean. For a trade, right?
That's a trade. That's not okay, oil's going back to the most recent highs, 75, $76. No. I'd be trading it with a first target of about 67.50 and then the next target about 68.70.
That makes perfect sense to me. That's what I think too. Right.
With the stop below. So again, it can be a very tight stop. So reward to risk could be fantastic on this trade. Now, tomorrow, if we break down and close below 63.96,
forget about it.
All right. Whoa. Probabilities have shifted. I got to shift with those probabilities.
Right. Okay. Love it. Yeah. What next, Robert?
Let's go to gold.
Of course.
Good old gold. You want to talk about something that's gone a whole lot of nowhere?
Yep. By the way, a whole lot of nowhere is better than going down in a correction, obviously, right?
Yes.
Yeah, the holders of gold
as I am. Right.
Look at the monthly chart on gold.
Holders of copper.
Yeah, exactly.
I mean, long term, it's still in bullish mode. Long term, don't get me wrong. But if you look at here, I mean, this is a prime example on a monthly basis of a sideways correction so far.
Look at those wicks. Jeez.
Yep. Boom, boom, boom. Where's it gone? It's gone a little up. It's gone a little down. But look at this. On a monthly basis, a sideways correction letting the rotation zone catch up. We don't know how this month is going to play out yet. Let me drop to the weekly. The weekly, you can see here, still caught between a weekly range. But if we were to get back below about 32.65 at this point and close below it, I'd be more neutral mode on the weekly. Until then, for me, it's just consolidation plays. It's just consolidation trades. Just watch this slight up sloping channel. But you see here, it's trading support and resistance.
Okay, give me a settlement where you think then the race is on to the upside.
A settlement where the race is on to the upside, it has to settle on a closing basis. We have to really start closing above 34, just call it 34.55.
Okay, we're not all that far from it, so it's conceivable.
No.
It's just not there. Yeah,
it's not there, and that's where that's not necessarily. You said off to the races.
Yeah,
I wouldn't put that off to the races yet. If
that would just swings it to bull.
That means, all right, we can continue higher. I'll start watching this channel. Even if it breaks out, we've lost a lot of momentum. And also, the dollar seems to be trying to get a little stronger in here.
I've seen that. That's a great point.
So that's why I'm like, okay, this is more range-bound trading. I need to see at least a momentum candle to the upside with follow-through. What would be a momentum candle to the upside? Something like this, and then follow through the next day. We had a couple in here, but then we sharply reversed against key resistance. We've had a couple sharply reverse. You know, that's where I am still in. We had a couple sharply reverse. So gold still really has to prove itself, and I need to see the dollar break down in conjunction with that. If gold starts taking out these highs and the dollar breaks down, then I'll really start favoring that continued follow through in gold to the upside.
And you would agree, and Bobby would agree with this too. Gold and the dollar can rally at the same time. It's just more rare, and it's not as easy a path, correct?
It's not the typical condition for those two assets, but it does happen all the time.
Yeah.
And here's why I'm watching. Let me just flip to the dollar. And people are so bearish on the dollar with a lot of hedge funds and everything else. That's not a buy condition for me. What I'm just watching here is it alerts me to something, because when the boats tip so far one way, it can snap back the other way. Now, we did have our snapback. We had the massive sell-off on Friday, but so far we're holding the prior breakout zone. Even if we pull back a bit more, unless we close below 97.39 on the dollar index, I will still look for bounce plays in dollar. We now, if the dollar collapses on a closing basis below 97.39 and gold's breaking out to the upside, I'm going with the gold breakout. The other reason I'm watching, if you're looking at the euro, not something we cover, but the euro triggered a double top, went to the first target, bounced on Friday, but we still have potential rollover plays in the euro. Now, if the euro closes above 116.65, the pattern has been invalidated. And then I will also start watching, if this pattern's invalidated on the euro, I'll start watching for more dollar weakness, and I'll start watching for potential more gold strength with a breakout. So you can watch a couple other things in conjunction to gold if you're a gold bull in the short term.
Love it.
So, Mike, I feel more positive about the Russell than I have in quite a long time. Can we take a look at the Russell? RTY is the future for people that don't know.
We triggered a double bottom last week, hit the first target, and bounced with a pretty strong reversal day on Monday. Mm-hmm. The only thing that invalidates the remaining targets on this pattern is if we close on a daily basis above 2240.4 or trade through 2259.1. Other than that, it's showing a bit more strength today because we're getting a slight rotation into it. We still have, I pulled off the targets from before with the inverse head and shoulders. We ran up, hit the first target. I'm on the Russell. On any continued rally, it's just into this major resistance zone. And even if we break out, the Russell is the one I'm not looking to in the short term for bullish plays still. Okay. We'd have to start really breaking through this 2300 level. And then we slam into about 2337 to 2350 harmonic area. So yeah, there are some bounce play cycles at the bottom. We came out oversold. I'm still looking for potential rollover plays unless we close above 2240. And then I'll start focusing on back into consolidation.
Bitcoin?
Oh, Bitcoin.
Yeah.
Bitcoin. Love the good old Bitcoin, which is interesting because we broke down out of a horizontal channel and we closed below the daily rotation zone, came back down. People wonder, well, when I talk about prior breakout level was, this 112 area, which we broke out of on the 10th of July. Now we're retesting. We have bounced enough. We pulled back enough to form a potential double bottom, which happens if we dip below the 75% harmonic. So that formed a potential double bottom. Still, something has definitely shifted. If you're looking at the flows in a lot of cryptos, it's definitely shifted before this breakdown. The thing that will only short-term make me bullish in this is we have to break above 115,756 with a follow-through close triggers this double bottom, with the targets being 117,680, 118,645, 119,608. And if you look where that takes us potentially back to, it takes us back to the prior top of consolidation. On the bigger term chart, we are holding the top of the weekly rotation zone. If that double does not trigger, I'm watching and we break down again. The key area I'm looking for is right around closer to 111,800 into the weekly rotation zone. We still have cycles near the top. We're not even to oversold yet. So if we do break below last week's lows, I'm looking closer to the prior breakout level you see here. And that was by these highs from back in January, which we based at multiple times on a closing basis and then took out those in the beginning of July. So that's going to be a very key area for me to watch. If we pulled back farther than that, if we close below roughly 105, then I'm going to go into neutral mode and be back where we could be continuing to pull back closer to the 50, but we're nowhere near shifting to neutral mode just yet.
So of individual stocks, Google has grown into one of my biggest positions. And again, I don't want to go into it, and it's not a joke why I own it. You guys all know why I own it. I've said a million times. If you don't remember,
what's the symbol of that? CIA?
CIA. I thought that was a funny joke. Bobby made me explain it on the Google symbol CIA.
Well, I could just see people typing in CIA going, what? Huh?
Someday I'm going to be live on this show and a bullet's going to come screaming through the window and it'll just be over.
See,
the show won't end.
See, people trading Citizens Inc. going, what is this?
Okay, so you guys, maybe some new watchers here. I've always contended for years that Google is just an arm of the CIA. Take the other side of that debate at your own peril, because I will destroy you. It just makes sense that Google would extend itself to the best collector of intel on the planet, Google. Anyway.
Well, can they look at everybody's email?
Of course they do. Can you believe they would do something like that? Not our government. Yes, they look at your emails, people. Let's be serious here.
Oh, well, all right. Sorry to harp on it again. Well, by the way, we had a double top that did confirm but did not trigger. It does not trigger an upwards close. But this, what did we talk about earlier? Percent B buy, dip below that line. Yesterday followed through with a confirmed buy. So on a break above the high was an intraday entry. Now trading against, it can't seem to get above this key resistance. And the magnet price is still 87.5, still holding the rotation zones. I'm still a short-term bull, even on pullbacks, unless I'll be patient on pullbacks and watch those weekly pullbacks if we close below the rotation zone and the low that made the percent B buy. So this percent B buy, remember, you have to do analysis. Just because something's a percent B buy, if you're going to play with these rules, put some common sense at least behind it with making a first target at least for a stop raise near the most recent high area. You see here it's rejected now 3 times, so that'd at least be for a stop raise for me. We still have a magnet price if Google can break out higher, 198.74, and if we get through there, you have a massive gap left behind from beginning of February of 206.38. If we take out those highs, I mean, you still see on the weekly basis, we got the bullish rotation zone. We're still upwards trending. You can see the selling pressure up here, by the way, on the 3 weekly.
Well, I'm short the 200 calls as well,
which can be fine for now. Above, that's just above the 87.5.
That's why I sold them, and I got 2 weeks left in them.
Yeah, and I'm looking for more of a consolidation right in here before the next breakout, especially with the markets rolling over. But if this breaks above this 198 level, we could see a pretty much rocket ship to the recent highs, back in February. We break above there, since you said you were a long-term bull of the CIA.
You bet I am.
The next targets, if you're looking at targets, this is why I love harmonics. 215, 223 are the next harmonic areas. That would be where I would look to take an action or watch for potential topping patterns in the short term.
And by the way, I think there's a group at the CIA going, well, right now, this Jim Iuorio guy, everybody thinks he's a crackpot and no one's listening to him, but he could become dangerous if anyone listens. That's what I picture that meeting going on.
Yeah, I just want everyone to know when the bullet comes flying. We'll continue the show.
Sure. Yeah. Well, it should be a great rated show. Yeah,
it'll be very high rated. So I want to ask 2 quick questions. Then we got one more from Tim. Let's do Timmy's first. TLT.
Oh.
But it's going to sound like a dumb question, Bob, but TLT is just 20-year. It's a yield-based or price-based? I trade the futures on this, remember? Is this yield?
This is yield.
Yeah, okay.
And it's 20-year and above.
20-year and above, okay.
It's blended. And why I groaned is because the TLT this is why I'll do the analysis on the futures. You're better to do the analysis on the 20 and 30-year futures than you are on the TLT itself because of the blending. Sure. Just a little tip there. If we're going to look at the TLT, again, right in here, it's been on a bull run. It's getting the cycles to the top, very overbought, approaching a major key target area. Oops. A major key target area. So could it continue its run higher? Yeah, I'd be watching for a pullback. We're trading against a major resistance zone here. I'd be looking for a pullback to see how we react over there on the weekly basis. We're approaching overbought in the weekly. We got cycles at the top. We're coming into, again, very major overhead resistance. So if you're long this, in the short term, I'd be tightening up stops. In the long term, there is still no fantastic breakout play just yet. If we look at the monthly, you can see here, in order for me to get really bullish long term, I have to get above. It has to prove itself by getting above about 92.50 at least. We've got a lot of overhead struggle to do still before I really start getting on a bullish run on the TLT.
And those lows are pretty well defined, making some pretty good support, right?
Right. I would not be, again, if you're shorting this thing or setting up bearish plays, which we could have coming into soon, would I be trading this to break to new lows? No, I would not. I'd be just trading it to break down to the prior major support.
Right. Makes sense to me.
Real quick, I just want to point out that ProShares has a 7 to 10 year, which might mimic a little bit more what Tim looks at, and that's TBX. I don't know how actively it's traded it. I mean, I've seen days where it's only traded, like a few 100,000 shares. So I don't know how liquid it is. But I wanted to look real quick since they have earnings after the close at AMD.
Oh, I own AMD. That's today?
That is today.
And by the way, it's a long-term hold. That's why I didn't really realize that it was today. I did not hedge it. I'm fine with it. Yeah.
They're not part of the Mag 7. So the next one I want to look at is Mags. So go ahead, Mike.
AMD is, hold on, let me get back to the weekly chart. Still, I mean, this still technically from probability wise, we could see higher prices. I am cautious with as overbought as it is, cycles pinned to the top with potential topping formations. Would I be shorting this? No, not on your life. I would not be shorting this. But any pullback to the weekly rotation zone would be still looking for potential buy bounce setups. It's just a crapshoot when it's this overextended going into earnings, because earnings can still beat and it could get a little sell-off. That's why I would not, it could get a sell-off, which I'd be looking for the buy setups. I mean, AMD is another one. Here's a prime example. This was a percent B buy into the rotation zone, percent B buy bar right here. That continued to run up. This was technically one yesterday. Would I be doing it? I mean, so you technically have one straight in earnings. We'll see how it plays out. Your next target areas, though, if this beats on earnings, there's a minor just resistance shelf at 184, but the next harmonic magnet price is 190, 189.60. And then the price above that's 208.45. And you have a major key gap fill. Should this continue its bull run, you have a major key gap fill to 198.39, which would be, did I get that price right? Hold on. 198.39. Yep. So that would be another key magnet price. Again, not shorting it, but I will watch for things like rotation zone or percent B buy setups on pullbacks into the rotation zone.
That makes sense.
Can you look at Mags, Mike? And then I'm done, Jimmy. I don't know about you.
I'll think as we're doing Mags, I'll think, but I might be as well.
Yep.
What is that hanging, whatever, island or whatever it's called? Is that Friday?
That was Friday. That was Thursday.
Yeah.
Oh, okay. Oh, that's okay. I got it. Yeah.
That was with your Amazon
and Apple. Yeah.
and Apple. You know, Mag is starting to again. This set up a pretty bearish candle with cycles at the top. We're still holding above a key breakout zone. You can see right here on a close. That was the why I put the line there. That was the key weekly close right there. Closes are more important than highs and lows. So if we pull back, I'll just be watching for pullbacks into the weekly rotation zone. Running out of momentum, cycles at the top. Would I be aggressively bullish up here? No, I would not. I'd be cautiously, very cautiously bullish, because we could easily pull back closer to the 50. We've just not done it yet. Or we could just have an extended sideways move, still letting the weekly rotation zone catch up before the next potential breakout play.
It's interesting. I mean, the Mag 7, you look at the individual stocks. I mean, we just looked at Google, Alphabet. You look at Amazon. Yeah, it popped higher, but it can't continue. Apple's chart looks terrible. Same thing with
Apple,
Meta, popped higher, can't continue. Microsoft popped higher, can't continue. Tesla's chart looks terrible. So the Mag 7, I referenced this recently, that in the movie, 4 of them died. And it looks like the same thing's happening here.
So all that's left is Microsoft, Meta, and NVIDIA, right?
Yeah.
And Apple did trigger a double top pattern. It's still stalling at the first target, but I'm not interested in Apple. From a long-term perspective, not interested at all. From a trade perspective, when we get closer between 198 and 195, I'll look for bounce setups only. Those aren't long-term investment. Those are bounce setups. But we'll take a look at this chart. Look at Apple. Since April, mid-April, it's gone a whole bunch of nowhere.
Yep.
A whole bunch of nowhere.
I got out of at least half of my long-term Apple. So
I mean, you just rattled them off. Amazon, yeah, could we get a bounce? But Amazon's got no traction yet. Right. No traction. We've got the first cross the rotation zone. So any bounce play, I'd be looking for potential rollover plays to form a stronger weekly bottoming pattern. We've returned to the bottom of the weekly rotation zone and a little prior key area, but we don't have a strong buy. Now, this is what I mentioned before, percent beat buy in the weekly. We could be setting one up this week. If we do, next week, I'd be watching this week's high. I don't know how this week's going to end out though. So I will be keeping an eye on that. That's could be a minor bottoming pattern in the vicinity of the 200. So that's something to keep an eye on. But again, do we have enough strength with one stock? Even as you went before with Google, with looking at this, we could still, it's so far just a sideways correction. Could we stay in this range for longer? Yeah, we could. What else do we have? Microsoft?
Yeah, Microsoft's been a rocket.
Yeah.
Microsoft.
But again, like no follow through.
No follow through. And look at the weekly. Look at this. We had one red week, and now we're possibly getting another one. In how many weeks? I mean, this still can go into consolidation for a while. That's why those mags, I would not be surprised to see consolidation. And then also what I'm keeping an eye on, especially after AMD earnings, is NVIDIA. We are in potential double top territory. So it has not triggered yet. And because you're in double top territory, it may never trigger. But you get below, which would be the stop on the percent beat buy, the farthest away stop on the percent beat buy. If that triggered, I'd then watch for the pullback and look where that takes us. The first target takes us right to the top of the weekly rotation zone, and we're so overextended from that still. So that's why on mags, I'd be real patient, because some of these charts, they're not bearish. They're just not super bullish right now.
Got it. Okay, let's call it.
Yeah, we're good.
So a couple things before we leave. First of all, remember we said at the beginning of the show, our sponsor, Independence Arc Farm. Please go check out their website. Grass-fed, grass-finished, small, independent farm. You guys are going to love Marco. He's a great guy. Also, join us at the unfilteredinvestor.com. Please, we go through this stuff in a more minute detail. And it's not just, a lot of people think it's just for traders, short and medium-term plays. It is for long-term portfolio construction as well. As you see, when Mike looks, he always goes into weekly charts and monthly charts. That's, I mean, what is long-term other than a weekly chart and a monthly chart? If you are an active investor, come and join us. You will not be sorry. Bobby? Oh, then the play out is, this is the Futures Edge. I'm Jim Iuorio. Well, someday we're going to be professional journalists. It's so funny that these independent journalists like us are absolutely crushing legacy media. I don't know if you saw Peter St. John's statistics on that when he came out with his video yesterday. Legacy media is in the toilet. It's because of people like us, and we still don't know what the hell they were doing. Imagine when we learn it, how much we're going to crush them. I'm Jim Iuorio. That's Bob Iaccino. That's Mike Arnold. Thank you guys for joining us.